there's other parts that I don't think that they can. So what is your thought?
My thought is actually they can control inflation if they are willing to get demand down to meet supply. So the challenge is that we have constrained supply. We may have, therefore, what one might describe as excess demand. Now, it will take some time, so I'm not sure they'll get to their 2% target in the next year or two. And as he said, it will cause pain. But history ultimately points out that monetary policy, if set at the right level and, as he says, maintained for a long enough period, will slow demand sufficiently to get it, to get the two, supply and demand, much closer to being in balance. There'll still be some shocks, obviously, but history indicates that at the end of the day, they can, the Fed and other central banks can get inflation under control.
Roger, it was pointed out that so many things are similar. It was pointed out that they said to Arthur Burns that, look, these are food and energy, and both are one-offs. What's causing this? It's not systemic. And there was some logic in Arthur Burns thinking that he had done enough, only to see it come back with a vengeance. Inflation. That's similar to today. What was it about the 70s that made it so sticky back then? And do you see things in the current environment that are similar to that could make it just as sticky, or is it actually not? We don't have a lot of what went into what happened in the 70s, the hyperinflation. We don't have things like that now, or do we?
Well, I think there's some good news here, which is that the 70s were different from the current period, different in three ways. One is that there had been a long period of overshooting and a Federal Reserve that seemed to make excuses of the type that you mentioned from Chair Burns. The second thing that I think was different was that there was no anchor. People had the Fed had no particular target of what they thought reasonable inflation was. Society had no particular target. Now we have the 2% goal, and so I think that has helped. And the third thing that was different then, as far as one can tell, is this thing that we call inflation expectations were unanchored. Right now, fortunately, though we can be complacent, as Chair Powell says, inflation expectations are still reasonably well anchored. So while I think there are lessons from the 70s about not letting any of those things happen again, this is not exactly a repeat of the 70s. Remember, this inflation is relatively new. It's relatively young, has some of the same underlying causes in terms of shocks. But I think while the Fed is somewhat behind the curve versus where they should be, it is nowhere near as drastic as they were in the 70s.
Well, I don't know whether you would know better than I would know about that, Roger. But just looking at what happened in the growth of M2 since the financial crisis, I mean, we were hit with back-to-back, once in a generation, as you call them, shocks. But whatever the reason was, we've been growing. We've been loosey-goosey and accommodative and QE 1, 2, 3 all the way to infinity, all the way since 2008. That's 14 years. I don't remember 14 years prior to the 70s where the Fed was so easy. Right? I mean, it's like a new normal for what we think of as interest rates now. It's been so easy for so long.
Well, you're right about the QEs, and you're right about a monetary policy that was easy. What was very interesting during that period that's just ending, obviously, is we had job growth and we still had inflation that was somewhat below the Fed's 2% target. There are some technical reasons for that that we don't need to discuss now. So I think you're right about the stimulus. It did not have the inflationary impact for a number of reasons. I think now what's changed is some of that bit of good luck and structural changes have led to, all of a sudden inflation breaking out. So I think we have to be, quite clear that, the Fed is probably somewhat behind the curve by their own admission, but it's not due totally to the length of the QEs. They probably should have started to tighten somewhat earlier. I think they would admit that. But I wouldn't, Joe, point to 14 years or so of QE as the primary culprit, because during much of that period, inflation was actually below the 2% target.
You think Fed Chair Powell thinks the possibility of a soft landing is remote or more remote at this point? Is that what we should have gleaned from Friday? Or do you still think he can do that? You think if he doesn't think he can, why should the rest of us think he can orchestrate a soft landing? Is that still a possibility?
Well, one of the things that was noticeable by its absence in the speech was exactly that point. It was a very brief speech, 8 or 9 minutes.
Right.
Couldn't cover everything, but I did
Right.
notice that he did not talk about a narrow path to a soft or softish landing, and he
Right.
did talk about pain. So I think the odds of soft landing are receding in everyone's mind.
Okay, Roger Ferguson, thank you. Don't make any outgoing calls, because we call you and then we have you on, because we're gonna call you again soon. You'll be available, right? Always for
I will
squawk
be there
calls.
for you always.
Thank you, and we're here for you.
Absolutely.
All right, sir, thanks.